Good morning, everyone, and welcome to the Modern Market, where every day we discuss everything to do with the modern market, that is the crypto market, the Ethereum market these days, and how to make some or a lot of money on the internet. Loaded up for discussion today, we have three pretty bullish headlines, I would say. We have the crypto market cap going over $4 trillion for the first time, as Trump is about to sign an executive order to allow crypto in 401ks. We have ETH being up another 7% on the day, is above 3.6K dollars. Absolutely beautiful run. And also Sharplink Gaming filing to increase its ATM from $1 billion to $6 billion after buying another $150 million worth of ETH yesterday. And then, as part of the crypto week, we did report on that earlier this week. We have the US House passing three crypto bills we'll get into a bit later, being the Clarity Act, the Genius Act, and the Anti-CBDC Act. Also got the latest on price action on crypto and NFTs, and probably a pretty focused discussion around what is going on with ETH. Today, I have Brett with me in the co-host seat. We're ready to get into it. But just before we do that, reminder, friends, as bullish as the market is, nothing that we say here is financial advice. This market is extremely risky. We do not know anything for sure. So please do proceed with caution and exercise your own judgment if you have any. With that out of the way, Brett, beautiful background that you have going on. How are you doing? Where are you at the moment?
Hello, friends. Yes, I am, I don't know, like 20 minutes and 40 feet removed from a flight. So I'm just in an airport lounge here in Copenhagen. I'm on site to hang out with the Mafia crew. And that comes on the back of 3 days of getting some tattoos in Italy. So that's why I've been missing, Monday and Wednesday. I couldn't attend stuff because I was on a table, frankly, and on a flight. So excited to be back. Excited that everything is pumping. It's kind of funny to see all this stuff going on from my perspective because my artist is, we'll say, crypto curious, enthusiastic. He's like excited retail. I actually paid my last session in Ethereum like a year ago,
Did they
and I
hold it?
was he did, yeah. So I was
Nice.
anticipating coming to this and like being like, bro, I'm sorry. Like I gave you ETH and it got cut into like a third of its value. It's like my bad, bro. And then, but like, dude, he's up. He's making money now, so he's happy. He's wanting to learn more. I spent a lot of time on the table just like breaking down some shit. So it was cool to get his perspective on a lot of this that's going on. While obviously it's bullish within the industry, everyone's going crazy.
Two questions on that. A, the sessions that you had this week, did you pay them again in ETH? And B, are you timing the sessions that you can only visit him and see him when ETH is above the price that you paid him with last time?
He actually, so he's a big Bitcoin guy. So like I think it resonates so easily with people. He's from Argentina, and then now he's in Italy. So like the like store of value currency stuff is something that resonates really deeply with him because like Argentinian pesos like just wrecks them, right? So like that resonates really well. I did ETH because that was my thing back in the day. And I asked him this time. I haven't paid him yet, because I have a couple more sessions in 2 weeks that I'll pay him for everything. And I was like, "You let me know. Do you want crypto or do you want cash?" And he's supposed to let
You
me
want
know
some
here in the
Ripple,
next day or so.
maybe?
I mean, I know I saw your little flex. You had a clean 10x, 100x, 1000x on first purchase.
10x on the first triple purchase. Only took me almost 7 years to get to that point, but it wasn't a big buy back then, honestly. So it wasn't worth selling it over the last couple of years. So it was nice to just see that finally go up. I still don't know a ton about Ripple, and XRP Army is something that I only started to get familiar with once we had this mini XRP meme season that lasted for 2.5 days. I don't know, like half a year ago or so. But it was definitely something I wanted to post once we got to that point.
Some lore on my upbringing. So again, I've mentioned in the past, in 2017 I got in on a smaller chain. I spent a couple of years building out like the NFT ecosystem there. VeChain was the thing. What you guys don't know that have like always spent your time in the big chains is a lot of these like alt chains band together because liquidity sucks, like in these smaller ecosystems. So like I was hanging out with the Cardano bros, the Algorand bros, the XRP bros. Like I was in the trenches with these people, like trying to like cross promote, like get liquidity from each other, like all this shit. So I actually got close with like the marketplace on the XRP ledger whenever they were trying to like spin stuff up and do like co-marketing and all this shit. So yeah, there's like little pockets of people that are just like trying to pump their bags. It's kind of funny.
Yeah, I like that. My favorite steakhouse in Vienna has one guy working there who is pretty active stock trader, I would say, but also a participant in the crypto ecosystem, mostly focused on HBAR, XRP, Stellar, Algorand as well. So completely different part of completely different bubble, completely removed from us, but he's probably having a good, very, very good week as well.
Yeah, H bar was another huge one. I have some friends like when I go to these conventions, there's always an H bar tent. Like, yeah, I have bros over there that I've been talking to for years that give hugs to. Like Patches is the big guy that I know. He now works for H bar, but they believe in this stuff, man. They're like to a fault, frankly.
Okay, final question before we actually have to get into the things. Do you know what HBAR does?
I mean, yeah, that's a hash graph.
I have
Yeah,
no clue.
I mean the value like they have a lot of like enterprise partnerships that they're gunning for, very similar like algorithm. Like there's just these like fast cheap chains that for one reason or another didn't get like into the zeitgeist of the industry, so it's like there was no adoption. So you say like, hey, I'm working on HBAR stuff, and even if the tech is cool, even if it's fast, even if it's efficient, no one gives a shit, right? Just for like whatever reason, like it just never could gain traction because of that. Like it's just hard to like build up get out of the cold start problem of like, oh, I don't want to come there because liquidity sucks. And like if liquidity sucks, like people like you are never going to go over there, right? Because it's like cool when I get a 10x on a $500. Like why would I spend my time doing that?
Yeah, that's fair. I mean, I'm more familiar with Algorand, but honestly, an HBAR wasn't clued up at all. Look, we have a ton of bullish news to get into, and I think you are here for this news more than for our HBAR and Algorand discussions. So let's get into that, starting as usual with the price action. Let me get that up on screen for you all watching on video. There we go. BTC is up 8% over the last 24 hours, 119K. ETH up 5%, 3.6K. Did go a bit higher than that. XRP up 6%, up 30% on the week, $3.4 for that. BNB also having a pretty good week, $737 for BNB, up 3% on the day. Sol.
BNB is about to have all-time high too. I saw someone tweeting that like it's not far off of that moment.
Yeah, we're getting pretty close with that as well. Let's maybe take a quick look at the BNB chart. It's definitely one we don't talk about too often. Yeah, we are 751 is what I can see here as the all-time high on the chart.
That's 1 year. You go to all, see if make sure it didn't pump cycle or something. Yeah. No.
Yeah,
Okay.
no.
Yeah.
That's it. Alrighty, getting back to Hyperliquid. Hyperliquid is basically flat at $46. It's down 1%. Over the last 24 hours is kind of also having a pretty flat week, only up 0.5%. Definitely a big of a lag going on there as well. A similar price path for SUI, at least for the last 24 hours, where SUI is flat. However, over the week, definitely up significantly, up 14.5%. Also taking a look at the meme coin side of things to get those. There we go. Tokens to you as well. Doge is definitely having a field day, up 12% on the day, up 20% on the week. SHIB up 3%. Bonk is down 7%. Pepe is flat. So it's a bit of a mixed day from what I can see. Some things running, some things correcting a bit, like MOG down 4.5%. Is there any really big runner? Chad is up 10%. Aura, how is Aura still a thing? Aura is up 6%, up 50% on the week, and still at 20 cents, so still at 200 mil. Bit of a mixed day. I think you get the picture from that, with some things being up in the single digits and some things correcting down a couple percent, but nothing too major on that side to report. Getting into the headlines, said at the top of the show, crypto market did cross 4 trillion for the first time. It has pulled back slightly from that, as Trump is about to sign an executive order to allow crypto in 401ks. ETH up another, now it's up 4%, not 7%, to 3.6K. Sharplink Gaming filing to increase its ATM from 1 bill to 6 bill and bought $150 million worth of ETH yesterday. Couple more bullish ETH news, actually. Some of them will get into the show later. Some of them will cover as part of the Web3 Roundup. And then the US House passing 3 crypto bills, the Clarity Act, the Genius Act, and the Anti-CBDC Act, terms of the notable price action, we covered all of those. XRP up to $3.50, Doge up 14%, and Gig up 24%. Taking a quick look at the NFT side of things, one thing is this beautiful CryptoPunk with Fedora selling for 44.75 ETH, and CryptoPunks are doing very well, holding significantly above 1 Bitcoin. However, for the rest of the NFTs, it's unsurprising to see a little bit of a pull back as well. Pudgies are down 1%, Bored Apes are down 1%, Miladies are down 4%, Tools are down 5%. However, most of these collections are still up double digits over the week. That is Doodles, Miladies, and Apes being up 10%, and Pudgies being up 47%. So still comfortably sitting at a 13.8 ETH floor. And going
That's crazy.
back,
Yeah, Pudgies has just been crushing, man. Like what was it, I just did a tweet where Tom Lee, the guy who's doing the
Yep.
ETH strategy, he just switches PFP to a Pudgy. Like seeing other L2s do it. Mode did it, like switch over to a Pudgy. You're seeing like Doritos or whatever, Doritos, like a drink thing. Like literally everyone is switching over to a Pudgy PFP. I don't know how much of this is like seeded by the actual team. Like obviously they made some customs for some of these people, but I do know that not all of them are specifically sent out by the team. Like I've had people reach out to me that switch the stuff for the actual social profiles, and like, yeah, we just, I have Pudgies and I want to do a Pudgy. It's part of the culture. I think it's a good thing for our brand, and they switch to a Pudgy for that reason. So it's a combination of everything.
Yeah, someone did post an overview of, I don't know, like how many dozens of brands and protocols switching to PFPs. And I think as part of that, it's also said that Pudgy didn't pay for that. As you said, some of them did it themselves. Probably some of them got reached out to, but it's definitely a very, very strong movement that we're seeing there. However, going back to the Web3 Roundup, where is it? There we go. Have a ton of tabs open today to get you the rest of the news from around the space. We have BlackRock filing for Ethereum staking capability to be added to its ETH ETF, and I think Wall Street will love native yield on their ETH. BitOrigin securing $500 million in equity and debt facilities to launch Dogecoin treasury. Tom Lee's Bitmain announced holdings of $1 billion of ETH. And as you said, Tom Lee himself changing his PFP to this beautiful custom Pudgy that we're sharing on stream. Robert Leshner's attempt to take over Liquor House to turn into a treasury vehicle appears over due to a fight with current ownership. Pudgies, in terms of some more news, revealed a new website. Liminal announced leverage customization on their Delta Noodle strategies. And Caldera claim, so a couple of people, including ICO Beast, posted about that yesterday. The token claim going live yesterday with the token trading at $1.5 billion. So that was definitely a nice airdrop for yappers as well. I personally didn't get it. I think Snapshot was quite a while ago, and you had to do some sort of verification also quite a while ago. So I completely missed out on that. But Brett, coming straight to you, anything from the roundup that you want to touch on?
I mean, most of it's going to be talking about ETH and like why it's doing its thing. So like of this, like there's some of the institutional stuff. I think we'll cover that in some of the headlines. And for me, it's just like I want to reflect. I feel like there's some reflection to be done because like everyone got kind of caught on sides by this move. I don't see like where was our headspace at? Why were we thinking that way? Is this natural? Like, yeah, I want to go down that path whenever we start talking headlines.
Absolutely. Before we do that, let's do one more different thing. Let's get to our sponsored segment of the day, Polkadot Explorations, and move into the headlines after that. So let me get this up on stream and on screen as well. There we go. Polkadot's main DeFi protocol, Hydration, is currently running the Giga Hydration Boost Wars. There are 3 live referenda on the Hydration subsquare to determine which pool will receive a massive yield boost. The contenders are Kusama, TBTC, and their stablecoin pool. And the price for the winning asset is actually pretty juicy because the winner will have a new additional G-Dot farm created. This farm will distribute 15,000 Gigadot rewards over the course of 3 weeks at a maximum rate of 222% APR. Now, of course, that yield will go down as the farm fills up, But just to put that in perspective, with the current yields on hydration, the stablecoin pool is yielding 16% at the moment, while TBTC earns roughly 19%. Also, the overall TVL in hydration is up to $284 million. So let's take a look now who is leading the boost wars at the moment. First of all, bringing up Kusama. Kusama is already out with only 37% voting in favor of the asset. However, the race between Bitcoin and the stablecoin pool is neck to neck, with Bitcoin sitting at 50.4% and the stablecoin pool sitting at 47.2%. We will definitely keep you updating on who is going to win the boost wars. In the meantime, thank you to Polkadot for sponsoring this segment, and stay tuned for more Polkadot explorations. And with that out of the way, I think it is time to move into the first headline, which is, said it at the top of the show, the crypto total market cap moving above $4 trillion for the first time, which is, let's zoom out on that, which is a very, very beautiful chart to see. I think we only have the last 2 years on that. Yeah, okay. So on the run up last year, we did hit 2.6 trillion, then went all the way to 3.7 trillion, did retrace back down to 2.4 trillion, and now are just a touch shy here on this chart, under $4 trillion. And as part of that, we had the Kobesi letter reporting that Trump is set to sign an executive order as soon as this week that would allow 401k retirement plans to invest in crypto. That opens $9 trillion worth of capital for alternative investments like crypto, gold, and private equity. And also, going to Truth Social, Trump. Just this one more post, and I'm coming straight to you, Brett. 30 minutes ago or so, Donald Trump posted again, it's too late, and the Fed are choking out of the housing market with a high rate, making it difficult for people, especially the young, to buy a house. Inflation, not reading all of that, is very, very low, and we deserve to be at 1%, saving $1 trillion a year on interest costs. So this rhetoric of him wanting to get rates down continues at the same time, which is a very strong setup for the market. Brett, coming straight to you for your first thoughts on that.
My first thoughts are like, oh, good, we get to scam the pension funds like TradFi. Like that's it. Like, oh, that pool of capital is like not sophisticated. It's people's retirement accounts, and like you just give that stuff to a money manager, then they put like 3% into a thing because it's beneficial to them. So it's undoubtedly a lot of capital, especially relative to us. And I guess it's cool to see that we're finally like starting to play like the big boys. Because yeah, it'll pump our bags undoubtedly. Because what they're going to do is they're going to get just like a market weight distribution of our industry, basically. Probably choose the top 2 or 3 tokens, and then just do again market weight distribution of those. So it's good for the majors within our industry. The other thing that with the total market cap of our industry, I would love to see the breakdown of that, like how much is Bitcoin, how much is stable coins, how much is like other assets, because I would bet that the mix of that is actually pretty different than it was the last time we approached these all-time highs. We've been talking about stablecoin adoption for a while. Undoubtedly, like that has grown over the last few years, and previous all-time highs, yeah, I would say the mix is definitely stronger towards that as a use case. So I would love to see that data and see how that looks.
Yeah, that is definitely a chart we have to either find or plot ourselves for one of the shows next week to look at, to see how it evolved over time. I mean, currently we obviously have BTC at 2.3 trillion. We have ETH being a $400 billion asset, XRP at 200 bill, and then Tether, which is obviously not reflective of the entire stablecoin market cap, but Tether alone sitting at 160 bill, Circle at 64 bill. So just these two together are at 225 bill. And that has massively, like those proportions have to have shifted massively from the last cycle when stablecoins simply weren't as big. But I think also with this ETH run up, the thing I wanted to look at a bit more, maybe we'll do that as part of the ETH segment, is to see how the ETH BTC ratio has been evolving and how it has been closing this gap a bit after a very, very long period, I would say, where ETH has been massively, massively underperforming. The only other thing I really wanted to touch on, because we also mentioned rate cuts, and then I'm gonna actually go straight into the ETH segment, Brett, which I think will take up the main part of the show, is because we touched on that post by Donald Trump on rate cuts. Just the current look, I feel we haven't had this poly market up in a while. On the Fed decision in September, $4 million market on poly market, and it's currently a coin flip. So we have 50% of the market thinking there's not going to be any change at all when it comes to the rates. 41% thinking is going to be a 25 bips decrease. 9% thinking is going to be a 50 plus bips decrease. So exactly a toss up going on between those two options. Brett, I saw you shared something with me in the private chat.
Yeah, the rate's gonna escape me. That's just not something I pay much attention to, although I know it does have large impacts on our industry. I was talking about, or the thing I shared with you is the stablecoin numbers. You can actually see the total market cap.
Yeah.
You can see we peaked at 180 billion back in 22, and then we're now up to 260 billion, which is still like, it's actually a lower number than I thought it was going to be. I thought it would make up a significant portion of that 4 trillion. So, you know, with this number, we're looking at, what is that, an eighth or something of total market cap, which is big, but it still shows that the majority of the wealth in our industry is coming from other tokens.
To me, actually, the insane thing is, like, this is, I got into space earlier than this chart goes, but this is the 2019, 2020 is a period when it started to get active and started to trade NFTs. And in 2019, you're telling me the stablecoin market cap was less than $1 billion, and it went up to $5 billion on Jan 6, 2020. And that was basically a 5x back then. And obviously, if we just looked at this year, this chart would look much, much steeper. But I didn't recall it like that. I mean, maybe even taking profits after flipping NFTs in stables wasn't a thing back then. It's something I certainly didn't do. But I would have thought, just gut feeling wise, that the stablecoin market cap would have been like maybe 30-40 billion dollars. But it took
That's how we all got trapped. We didn't even have it as an option. We were riding that shit down.
That only happened a year later. So like first time we crossed 40 bill was in February 2021. First time we crossed 100 bill. I went fast. That was in May 2021. That's such an interesting chart, Brett. Thank you for bringing this one up. Shall we move on to the main part of the show, to the main headline? Said it at the top of the show, very, very bullish day for ETH, up to 3.6K, sharp leg filing to buy another $5 billion worth of ETH as well, and having recorded $150 billion worth of ETH purchase yesterday. You mentioned BlackRock filing to add staking to the ETF. So quite a lot of things going on at the same time. Brett, why don't you break this down for us?
I actually don't have the headline, so we're gonna have to just ad lib this stuff.
I am gonna do it instead. Don't worry about that. There we go. So first of all, let's start with. Let's start with this. We said ETH is up to 3.6K, and we did check in with this poly market, which I'm sharing on screen right now, which is an $8 million market, asking what price will ETH hit in July. I think when we touched on that earlier this week, like the consensus opinion was we're gonna hit maybe like 3.6K. Now 80% obviously think that we're gonna hit 3.7K in July, and July is only here for another 13 days. 63% think we're gonna hit 3.8K. 32% think we're gonna see 4K ETH in July, and 20% think we're gonna see 4.2K ETH in July. So that is still a very, very bullish outlook when it comes to poly market for ETH. And then the second part related to that headline, which we wanted to cover, is the additional filing by Sharplink Gaming to increase their at the money from $1 billion to $6 billion. And putting that into perspective, that is 85% of all strategic ETH reserve entities combined. That is almost 31% of all ETH ETF supply. FAPTA is posting, I repeat myself, but SBET is coming for all your ETH. Protect your ETH at all costs. And then the other part connecting to ETH, talking about ETH strategy companies, is Tom Lee, who is now rocking this pudgy, as we said, posting the upside for ETH treasury stocks. BMNR is impacted by how much.
Do you think he changed his headline because he watches this show? Look, do you see his handle? Tom Lee, not the drummer. I think he's a modern market watcher.
Ooh, maybe someone. I like that narrative. maybe someone showed that clip to him. Maybe we actually need to reach out to him and see if we can get him on the show for a dial-in. I think that would be pretty awesome to make that happen. So he said the upside for the ETH treasury stocks is impacted by how much ETH could rise in the future. MicroStrategy saw an 11x in BTC. Actually looked at the chart yesterday from 2020 to 2025, and ETH has been range bound since 2020. But stable coins are creating the chat GPT moment for crypto. And then the other thing I wanted to take a quick look at.
Such a silver tongue. We see that, and like that makes no goddamn sense, right? It's like, oh, if you own ETH, you own stable coins. Like, if you don't, you don't derive value from that. It's like none of that stuff makes any sense to draw that connection. But Ethereum does have the bulk of stable coins that exist on it, so like there's a little bit of a connection there, and they're eating it up. So we ride that wave. We don't push back on it. We let them buy our bags, but like, yeah, he's sing-song in there and it's working.
It is. He also posted. You weren't on the show with us. He also posted this crazy looking chart, which I had the pleasure to explain what was going on with that as well. So definitely very good at marketing his
bag.
Yeah, of course.
Yeah, like I mean, you see that like what he's calling for is like a 11x on Ethereum. So I was like, okay, Ethereum's going to go to 30K, and he was calling for MSTR on top of Bitcoin. Whenever a Bitcoin did the 11x, did like a 35x. So his particular asset is not going to do the 11x; it's going to do the 35x. So like, you should buy his thing, and then he can arb it out and make money on top of it. So yeah, I mean, clearly pumping his bags, but like, he benefits.
I mean, BJ, has said it a couple of times over the last weeks to buy and invest with some imagination. And I like that imagination of seeing ETH above 30K. And I mean, it's been, and Tyler has had this beautiful
imagine
ETH at 30K. I can't. I think ETH at 10K already is like such a massive. Like, okay, ETH at 10K. And so I need ETH at 11K actually, because my first ETH buy was at $11. So that would be my 1000x on that. That would be
wild. Make it like a 2.5, like it's a 10x, so it's like a $3 trillion asset. So it basically makes ETH the market cap of the industry.
Yeah.
Right? Because it's like
sounds about right. Yeah. It's like XRP Army saying XRP can flip, BTC and not looking at a supply of things.
I mean, we have the government talking about stablecoins themselves going to like a $10 trillion asset by 2030, right? So like, there's growth. Growth is coming. All these numbers are going to go up and to the right. It's just like, who's going to capture the majority of that value? So like, it just depends on timeframes and everything else. So like, can you eventually hit that number? Sure, but like, to expect it to be the value of the entire industry over the course of the next year is drastic. Let's see.
Yeah, no, I agree with that, and I think even if you put it into proportion with 401k buying those $9 trillion, like, it will take years and years. Like, it took ETFs a lot of time to become established and to make it a habit to put a certain proportion of your money as part of your 401k into crypto. And that's not going to be 50% to pump ETH to a $4 trillion asset. It's not going to be 50%.
Yeah. Now that the percentage has grown, right? Like, whenever it started, they were recommending like, okay, 1% in Bitcoin. And now it's like, okay, you could do 3 to 5% by money managers, saying 3 to 5% exposure to crypto, do that market cap weighted between Bitcoin and Ethereum and maybe Solana, because they're the ones with the ETFs. And maybe the tail will grow a little bit on that. But you think about that. So you're like, okay, 9 trillion, not everyone's going to do it. So 9 trillion, cut it down and 60% of that, right? So, okay, so 6 trillion, 5 trillion, then 3% of that is what's going to be allocated. What's the buying power of something like that? It's still several hundred million, right? So that's still good buying power, but like, you need more than that to double or to become the market cap, or to go to 2.5 trillion as the value of ETH.
Yeah, I mean, just even doing like the simple math of saying which won't happen. 10% of the money flowing to 401ks is just going to instantly shift to crypto. That's 900 billion. Say half of that goes to BTC and half of that goes to ETH, which again also won't happen like that. But even then, ETH would be at like 850 billion and wouldn't cross 8 trillion. So it would still be like a good 5x away from the beautiful picture that Tom Lee is painting. But summing it all up, and I'm going to go to the post that you shared, Brad. Tyler made this very good summary saying, A, we have the executive order for the 401ks. B, we have the Genius Act, the stablecoin bill, which we're going to get into a bit later in the show, also passing the House vote. We have BlackRock filing for ETH staking for its ETF, which again, I think is, if that goes through, very, very impactful, because I can't imagine Wall Street not loving an asset which is going up more than a tech stock, but is also like quote unquote paying dividends, earning yield. Then the SBET filing for an additional $5 billion of ETH, and ETH ETFs setting the inflow record at 727 mil, which we reported on yesterday, especially putting that into perspective with the with the inflows into the BTC ETFs, which were only quote unquote at $790 million at the same day. So basically 90% of the amount that BTC saw as ETF inflows also went to ETH, which is a ratio that we've never seen before, and not with numbers as big as that.
Yeah, and the tweet that I gave you is links to this that inflows number. So like the thing, so this is Sassel, like a notorious ETH perma bull. He does the daily way, so he's been deep in the ETH trenches for ever, right? He's super bull. He's talking about the amount of ETH issuance. I brought it up a few weeks ago. Like that's the Bitcoin has the hard cap on total supply. Ethereum has the hard cap on the amount that can be issued over time, right? So if you even say like, okay, Bitcoin has the block rewards, a block subsidy every time, like the amount that is emitted into the ecosystem right now is technically still more than Ethereum. It's just the problem is Ethereum's demand side was lagged, right? No one wanted it because you didn't see value accrual. We were all overanalyzing it based on revenue, based on whatever, based on L2s, and saying it's fractured, it's fragmented. Everyone's going to Solana, everyone's buying Bitcoin because it's a store of value, and their demand side was never there. So like what he's highlighting here is saying that like if you look since the merge, right, because of the capped emissions that Ethereum can actually have, it's like 1.5%, or like other chains are between like 4 and 8% typically. Like if you look at the emissions that happened since the merge, the amount that has been accumulated over the last few days, now that you finally have the demand side being picked up because of the stories being woven by Tom Lee, you are quickly exceeding the amount of supply that is being created by Ethereum. So like they're exceeding that since the merge, right? Already over the last few days. So everyone is now calling for a supply shock moment where, you know, there's only so much Ethereum to go around. It'll never, like, it's not going to continue to grow that emissions because it has a hard cap on it. And now that they have been able to actually spin up this institutional demand, yeah, it's gonna go up quickly, and then that adds to the narrative right now because people are bought into the fact that this thing is in demand, numbers going up, the technology is great again. Now it's a scarce asset. Now it's ultrasound money again. Now it's all of these things that was wearing off inside of the industry because people outside of the industry are just saying we don't care. Bye.
Yeah, I like that thinking. It's just, and we spoke about that earlier this week. It's a nice way to bring back this ultrasound narrative. Obviously, it's not burnt if it goes into an ETH treasury company, but the assumption is that they will keep it for a certain period of time. So it is removed temporarily from the market, which is happening at a proportion. I mean, daily ETH emissions of what, like 2K, and then you have 200,000 ETH going into a very, very bullish day into all those ETH ETFs. And I think if we maybe also bring, if we also then look at SBET, these additional $5 billion, Tom Lee wanting to also extend that ETH treasury as well, and just bringing up this chart for SBET. I mean, SBET is up, what, 96% over the last 5 days. Yesterday was up 120% over the last 5 days as it hit $45. So definitely seen a bit of a retrace from that. Also, the pre-market was up to $40, corrected down. I think that there is a lot of excitement coming for this potential, for this potential additional $5 billion ATM. If that goes through, I think that SBET could do very, very well, especially in a world where ETH essentially only needs another 12-ish% to finally cross 4K again. And then I can see this supply shock moment, which you just mentioned, happen and see how that looks on the market.
Yeah, the thing that is notable, because like this is the bull case whenever the merge happened, right? The last time Ethereum hit all-time highs, it was proof of work, and the emissions that were coming out of the chain were actually pretty fat, right? Like whenever it went from proof of work to proof of stake, the emissions got cut down really low. So that means last time it got to all-time highs in these 4,000. I think the amount that was being emitted into the ecosystem through these miners was measured to like the hundreds of billions of dollars. And as the number went up, the more raw numbers more raw dollars were being emitted into the ecosystem that was being sold. That was sell pressure that brought it back down. It's very heavy at the top. Whereas now, yes, the number goes up. It's still like the number that is being emitted as block reward, because it is a percentage thing, is still going to go up, but not nearly to the degree that it was before. So it's a little lighter at the top whenever we actually start getting into these breakout moments. So that's what people were excited about, saying like, okay, if you thought 4K was bullish in 2022, whenever it had all of this heaviness at the top, and it just got heavier as you went, now just wait and see what it does. So if the demand is there, like, maybe it can get silly.
Do you think that it will get silly? Did you adjust? Are you doing anything?
I've been buying
in particular? You've been buying at these levels?
Yeah, I bought at the beginning of this week and at the end of last week. I had a lot of stables that I was just sitting on, mostly things that I acquired and was just like stashing to the side. And once I recognized that it was no longer like a industry driven movement, it was just like people were bidding, and it wasn't sophisticated. They weren't looking at like revenue and rev and all of this shit. They were just like, the narrative of stable coins was connecting. I was like, all right, I'm bidding this. I swapped all my stuff over. I'm just kind of writing it up. I'm not doing a lot of treasury plays. Although I did do one for the hype D. So I want to do like the hyperliquid thing, because I still think there's movement there. So I got some more hype exposure, and I already had a decent amount of ETH exposure, but I extended my ETH exposure over the last week, or just like raw ETH purchases with stable coins.
Nice. I didn't do that. I am currently happy, I would say, with the ETH bag that I hold. I also started, that's something I didn't do in quite a while. In my mental model, I started to count NFTs as part of my ETH bag again, because they are showing signs of life on the one hand, and B, the price of ETH makes it worth to do that count again. I mean, Pudgy Penguins essentially are now above 50K a penguin. My Bad Buns collection, which is now 48, 49, is about to cross 100K at these price levels. It's getting close to that as well. So these things are adding up again, and it's fun. It's fun to to look at the NFT bags again. And another thing that also went that was on my mind was Ethos, actually. The amount of
The validator.
No, the validator. The validator is nice. Yeah, that I forgot.
Oh yeah, dude, I got a couple ETH stashed in there. I forgot about that. I was staking a bunch of shit.
Like the ETH that I have vouched there. Now I'm starting to think, if ETH crosses 4K, do I really vouch? Do I really want to vouch that much for that person? Or can I pull a bit out? It's getting significant. It's now actually the ETH that I used, and I think that's the key message here. I was so used to ETH being a productive capital and just being in this 2K range for years and years and years, that I have it in so many different places and across so many different wallets, that just have like one ETH sitting there, or a couple ETH in a protocol doing whatever I was doing back in the day, that I think I really need this weekend to consolidate some of these positions and take some ETH out and just make a count of how much ETH I actually have now, because I don't really know. But then I'm also saying this, I'm flying to Copenhagen tomorrow in the afternoon, so essentially I have only the morning tomorrow to do that.
Yeah, so two things that I'm thinking of is, one, Like I have two TGEs that I'm actually looking forward to that I presume are going to happen, which is Fantasy Top and Ethos. Like both of those things, I believe, if I have a TGE, and I think they will be now that ETH is actually moving. What happens to the economies on top of ETH? Because I feel like it's been pretty isolated to a few things, like Kaido, virtuals, and then like a few DeFi protocols. But there hasn't been any like crazy ETH ecosystem stuff. And I'm wondering with ETH actually not catching a bit with all this. If you're mentioning NFTs, it made me think of like, okay, what applications are actually going to run? Like, is Aerodrome on base now going to like start moving a little bit? So I'm trying to think down. I don't want to go too far down the tail of like chasing these things. Like I don't need the beta. Right? I can do stuff with Ethereum. I could do stuff with Hyperliquid. Like I feel like all of these things have enough room to run that I don't need to like stretch myself down the long tail. But there are a few things that I'm trying to pick my spots on.
Yeah, now that you mentioned that, I think that's also an interesting discussion to have, which is the timing of those TGEs. Because last time we did run up like crazy. We had someone starting the TGE hype, was Portal, and then everyone wanted to TG and align the schedules, and there were like just way too many TGs happening. And now I can see something similar like that happen. And what also happens is once companies start to TGE, the exchanges, they are starting to increase the prices for being featured, for having a listing. All of those things are getting very, very expensive pretty quickly and going to ridiculous numbers, which is then also going to stop this TGE hype a bit in the future. But I think this combination of now being early into this run up and having actually a good protocol to TG and having a bit of a like first mover advantage, allowing the market to like ape and degen into, could be very, very worthwhile. And it's interesting to think about that from a founder's perspective, because like I advise a couple companies, and my typical thing is always to be, don't worry too much about timing the market with your TGE. Like just get the thing out at some point and build your product and focus on that if you believe in the longevity of that. But if you are in a hype season like this, rather be early than late. Like you don't want to be the last project to TGE after ETH has finished its run and 20 projects did front run you on that. So this is probably like the only stretch of time where I advise, if you can, in a reasonable way, move faster with the TGE. But otherwise, I'm like, just don't think too much about that as a founder. But curious to hear your thoughts on that.
I fully agree. I was just it's not TGE specific, but there's just noting all of the energy that's taking place inside the Ethereum ecosystem. I've had no less than like 10 people that have sent me a DM of like, bro, Mega is looking super mega right now. Like it looked cool before, but now that it's doing good, it's like wow, Mega's looking super perfect at like timing wise. So like there's a lot of energy in the ecosystem, and they're excited for us to come to market, whether it's for like just the protocol itself or like obviously we did ICO basically with the NFTs. We will be TGEing at some point in the future. Same thing with like Abstract, right? Abstract's been building up towards something. Like there's a lot of these protocols that have positioned themselves to take advantage of this moment, and it's looking like it might work out well.
Do you feel like, asking you from the Mega ETH perspective, do you feel additional pressure to, because of this run of ETH, to come out with mainnet, or is it like, no, it's just a good sign, you're happy to see ETH running, but the team isn't like too, stressed, too extra stressed because of that?
Yeah, I would say that like we have seen a lot of appetite with and without ETH being successful. So like what we were already seeing, which was good and independent of ETH, we've established ourselves as something that is bullish, whether or not ETH is like running. So like there's been that, and we've been happy with that. It's been good, and just now it's just like there's a little extra on top, which is obviously great for us, but no pressure. Like we still have to execute regardless whether ETH is $1,200 or 4,000.
Yeah, I think that is a very, very healthy approach. Look, before we move into the last headline, we have like 10 minutes or so left in the show. You mentioned you've been buying ETH. I said I want to accumulate or consolidate my ETH across my like different holdings and wallets. Do you have a price target in your mind? Do you have some sort? I know you're not the most active trader, but do you have some sort of time frame? What are some of the maybe indicators that you're looking at when, or what needs to happen for you to take some
I
profits?
have
Like,
a vibe target. I have a
good.
vibe target.
Is it
Yeah.
30K?
No, like it's wherever the price is, whenever I feel like things are getting so. And like I don't have like a personal net wealth number. I don't have a specific portfolio number. I should probably start like reflecting on those things and set them before things get like really crazy. So once I hit those numbers, I can like immediately, FSHR my way out of there. But yeah, nothing is set in stone right now. I think right now it's clearly so early that like it's okay to just kind of ride this wave for a little bit.
Yeah, I feel very similar about that. I'm terrible with like hard price targets. Rahim on the show on Tuesday asked us for one, and I said like ETH is going to be at 3.8K at the end of the year. Looks like it could be there tomorrow already. So I'm terrible with that. I more like to think about general timing. And my thinking still is that mid at latest midterms next year are the end of this craze, but the stock market is forward looking. It is a couple months, half a year, something like that ahead. So depending on how the rest of the year shapes out, somewhere towards December, maybe Q1, I think will be the time for me to take profits. But obviously, all of that can change depending. It's still a president's market, depending on what Donald Trump will post, do, sign in executive orders. But that's just the general framework that I
Yeah.
operate with.
And to be honest, like the only thing that I have that actually has an expiry on it that I need to stay aware of is my Coinbase options. So like I'm still in the mindset that I feel like a lot of the coming opportunities, although it's shifting back to crypto, is still in the TradFi market. So I'm trying to keep my eye over there. I'm trying to make sure I have the appropriate exposure across stocks and upcoming IPOs. And crypto, I'm mostly just like staying put, trying to position myself to get more wealth when it comes to TGEs. I feel like I'm in a good position with a lot of those things, but trying to make sure that I'm there to capture that and just like not fumble the bag that of what I do in my other holdings. Just kind of ride those waves.
Yeah, very much agree with that. Mando also posted earlier today in line with this, saying this is one of those times where the less time you spend on CT, the more money you will make. People will FOMO and get wrecked. For me now, the more active part is because I just enjoy the trading game too much, and I am very much into the stock trading game right now. I said it on the show. I started like with Circle, which is when I basically before that my stock portfolio was super boring. It was all S&P 500 and MSCI World, so world index funds basically for the MSCI World set of things. And then I went into Circle, took profits there. I bought Coinbase, I bought Hood, and it just clip it into the next thing, which now is Sharpling. Traded in at 19, traded out at 27, bought back in at 30, and now I'm holding. Didn't trade out at 45 yesterday, but I am very willing to see how high ETH can go in this run and see if Sharplink will continue to be this 3x leveraged play until it won't. But I think that could be a very nice thing. And if this strategy works over the next 1 or 2 months, then that means my brokerage account will have actually a decent amount of money in there for some of, and you mentioned it, for some of the IPOs that we are waiting for in fall, which also will have, if this continues, an amazing timing to come to market.
Yeah, my stock portfolio has turned into my alt portfolio because like all of my brokerage stuff is still crypto focused. I have Hood, I have Hype D, so the hyper liquid DeFi. I have coin. I have like so like yes, it's the exact same as you. I have a couple of ETFs in there just for like stability. I have more off chain Bitcoin than I do on chain Bitcoin. I have it through my brokerage. So yeah, like that's actually where I'm actively managing stuff as opposed to my on-chain stuff where I'm just kind of I feel positioned.
Interesting. What's the proportion of that, if you know it, off-chain to on-chain Bitcoin?
Oh, Bitcoin specifically? Dude, like
Or
90,
off-chain to
90,
on-chain
10%.
and
Net,
off-chain
my
to on-chain crypto and
net worth.
crypto-based holdings?
Yeah, if I had to do net worth, it's probably like 60-40 off-chain right now.
Interesting.
Because I full ported into Coinbase a year and a half ago. So this run that Coinbase is going on has basically made it a little lopsided while I had a lot of stuff in on-chain stuff. And then like the airdrops and stuff have helped. But yeah.
If I don't account for like stable coins and cash in the banks and only look at like invested risk on capital, for me that allocation would be like 20% off-chain and 80% still on-chain. But the off-chain part is definitely growing, and there is a couple of times where money went directly from, I mean, not directly, went from ETH into my bank account and then into the brokerage account to increase the stakes there a bit.
Yeah, if we're talking unrealized, like at times, because like I had that pups bag. Literally, if like just being honest, that pups bag ran to like $800,000. Like it was ridiculous. So it was flipping shit all over the place, and my numbers were crazy. I did not capture anywhere near that in that thing. I wrote it down to basically zero. So like that number has changed drastically over the last like 2 years.
Yeah, I can see that. For me, like and then I want to get into the last headline. The biggest change of heart has been this. Initially, I said, and I said it a couple of times on the show as well, I don't know, like a couple months ago, maybe half a year ago or so, that my stock portfolio, I don't want to have crypto adjacent stocks in my stock portfolio because I already have enough crypto exposure either way, and I want it to be the boring MSCI World S&P 500 type of stuff. But then I realized the only thing where I have like deep and daily knowledge is actually cryptos. I'd be pretty dumb to not use that and trade stocks with that. And this week was a beautiful setup for an example like that. We had the, and that's going to be my segue into the last headline. Then we had the bills not passing first. Then we had Donald Trump posting 12 congressmen and women who voted against that they will come to the Oval Office and they're going to vote again tomorrow. And after having a conversation with him, the president, they will vote the bill. They will vote in favor of the bill. And this is exactly what happened. And Circle reacted beautifully, went from $200 to $230, which is a trade that I missed. But it's thinking and information like that, which we research all day, every day for this show and just for being participants in the market either way, that I'd be just dumb to not put that to use as part of my stock trading portfolio.
I think the thing that makes it different now is the like the level of impact that it has on traditional stocks. Where like that wasn't a year-round thing, right? Like if you did this like a year and a half ago, there were very little stocks that reacted to news taking place within the crypto industry. Now that it's a global thing,
Sure.
there's broad adoption, like the weight, the magnitude, the liquidity, the amount, the raw amount of stocks that is applicable to is much bigger. Like it was basically just like hood on like a 5-year horizon because you knew they were signaling at something, you know, down the road, and like Coinbase was basically it. Like you were starting to get ETFs, you were starting to get a few of these other things, but now with treasury companies, with Circle IPOing, with more IPOs on the way, like now it's just like it's a wider range of things to actually have more dynamic plays.
Yeah, that is an excellent point. Look, let's use the last 2 minutes in the show to give you a quick update on those 3 bills that were voted in favor by the House. So we have the Anti-Central Bank Digital Currency Act, the Anti-CBDC Act, that is Digital Asset Market Clarity Act of 2025, and the Guiding and Establishing National Innovation for US Stablecoins, aka the Genius Act. Just a quick breakdown on all of those. Genius Act is this comes via a good explainer on Forbes, legislation to establish a regulatory framework for stablecoins and guidelines for banks and other entities that issue stablecoins and safeguard stablecoin holders. Anti-CBDC Act to prohibit the Federal Reserve from issuing a central bank digital currency. And then the Digital Asset Market Clarity Act to divide regulatory jurisdiction for digital assets between the Commodity Futures and Trading Commission and the Securities Exchange Commission, that is the SEC. The bill would establish definitions of 3 types of digital assets: securities, commodities, and stablecoins, and assign regulatory duties to each agency. And of course, speaking about regulation and speaking about politics in the States, I can hear the sound in the background that someone is joining us on stage. It has to be Funky with his hand up. Funky, my man, welcome to the stage. Definitely want to hear your thoughts on that before we close out for the day.
GM boys. Yeah, sorry about that. I lost my speaker connection earlier in the show, but I was happy to listen. Great show. Basically, there was a lot more happening in the background that I think people weren't aware of. It got pretty contentious down the line in terms of like, because I was reading a lot of this in the Blockchain Association member chat, talking about like which Democrats were stepping up, which ones were peeling off, so on and so forth. But they wanted to combine the CBDC bill with the market structure bill. People were freaking out because they didn't want clarity to be mixed up. So basically what happened is, as everybody saw the headlines, These three bills passed independently. The Genius Act, which I think is a lot of people are excited about, we've been talking about stable coins for a long time, will actually be on President Trump's desk today at 2:30 p.m. for the signing. So it will be law by the end of today.
Awesome.
Another important piece is that then the clarity is going to go back to the Senate and have some final reviews, I think, there before it can finally be sent over to the desk. And the same thing for the CBDC bill. What they did was, I believe they packaged something with the defense spending, and the CBDC bill was somehow part of that broader bill. But really interesting back and forth that was happening behind the scenes, which a lot of times we don't see. We just see the headlines and the end results for many of these big news items. But it was kind of contentious, especially on the House floor. There had to be some concessions made to get some of the Republicans from the Freedom Caucus that were originally going to vote no. Then Trump had to kind of wade in and talk to them behind the scenes to get that to go through to where they swapped their votes. But in the end, the net result is very positive for the industry. And it's something that I think everybody in Web3 can be very excited about, just where this is all going. And to your points that you guys have been talking about, this bull run, I think the whole 4-year cycle thing is kind of over. This may go well into Q1 and maybe even all the way to the midterms, depending on how this shakes out with Powell, whether he steps down in May and everything else. So very exciting days ahead.
Thank you so much, Funky, for these very, very detailed insights. Appreciate them a lot. As you said, a lot has happened in the background, and definitely don't read all of those details on the timeline. So super helpful to have your expertise on that. Brett, any last thoughts on this show from you, or shall we close it out for the day?
No, man. This weekend's going to be fun. Let's just ride this wave. It's good to be back.
It is good to be back, and it's also going to be good to see you in person this weekend. But that's it for the show today. That brings us to a close. Brett, thank you so much for co-hosting with me today. Funky, thank you for joining us on stage as well, and for those insights on the acts. Thank you to everyone in the audience for joining us today. We will be back as usual on Monday, 7 a.m. Eastern Time. In the meantime, we'll upload the show also as usual to Spotify and Apple Podcasts too. Have a great day, have a great weekend, and see you on Monday.